Welcome back to Inside X, where we dive deep into the world of Elon Musk's groundbreaking ventures. Today, we're unpeeling the layers of perhaps Tesla's most audacious gamble yet, the Robotaxi. Elon Musk has promised 1 million Robotaxis by, well, he's adjusted that timeline a few times. But now, with initial trials underway, the question isn't if Robotaxis will change our lives, but how profoundly they'll disrupt the multi-trillion-dollar transportation industry. And what does it mean for Tesla's stock price? Get ready, because the ride is about to get autonomous. For years, the idea of a fully autonomous robotaxi has been the holy grail of the mobility sector. Imagine, no drivers, just a car picking you up, taking you to your destination, and then autonomously moving on to its next fare. Tesla's vision is unique, leveraging its vast fleet of existing vehicles and its camera-only full self-driving software. Unlike competitors like Waymo and Cruise, which rely on expensive LiDAR and radar arrays, Tesla bets on advanced AI and a massive data advantage from billions of FSD miles. But where are we right now? As of mid-2025, Tesla has initiated limited robotaxi trials in Austin, Texas, with Model Ys, albeit with safety monitors in place. This is a crucial first step, but it's important to note that competitors like Waymo, backed by Alphabet, and Cruise, backed by GM, have had operational, driverless robotaxi services in several cities for a while, albeit with their own set of challenges and operational costs. The race is on, and Tesla is entering with a distinct, aggressive strategy. The autonomous vehicle market is a battleground, not just for technology, but for market share. Tesla, their strength lies in their massive vehicle production capability and the potential to unlock a robotaxi fleet simply through software updates. Their low-cost, camera-only approach could give them a significant economic advantage, potentially operating at a fraction of the cost per mile compared to traditional ride-hailing or even other robotaxi services. Waymo, Alphabet considered a leader in the space. Waymo has accumulated vast experience with fully driverless operations in cities like Phoenix and San Francisco. They use a more sensor-heavy approach, which is arguably safer but more expensive to scale. They're making steady, cautious progress. Cruise, GM also a significant player. Cruise has faced recent setbacks, including a suspension of operations in San Francisco. This highlights the immense regulatory and safety hurdles inherent in scaling autonomous systems. However, GM's manufacturing prowess and capital mean they remain a formidable contender. Other tech players, companies like Zoox, Amazon, Mobileye, Intel, and Baidu's Apollo in China are all pushing forward with their own autonomous solutions, often through partnerships with automakers. Traditional automakers, GM, Ford, Toyota, VW, Hyundai, many are investing heavily in their own AV divisions or partnering with tech companies. Their deep manufacturing expertise and global distribution networks are huge assets, but they generally lack the integrated software and AI capabilities of Tesla or Waymo. Now, let's talk about the incumbents, Uber and Lyft. These ride-hailing giants have built their businesses on a massive network of human drivers. The robotaxi revolution presents both an existential threat and a massive opportunity. They need autonomous vehicles to reduce their highest cost, driver wages. We've seen them partner with AV companies like Waymo and Motional. Their likely strategy is to integrate autonomous fleets into their existing platforms, perhaps becoming a software layer that manages autonomous ride-hailing services provided by various AV fleet owners. This would allow them to maintain their customer base and brand, even as the underlying vehicle ownership shifts from individual drivers to large autonomous fleets. Predicting the future of a nascent, complex technology like Robotaxis is challenging, but let's break down realistic scenarios. 1 year. Mid-2026 Tesla, the Austin pilot will likely expand to a few more geo-fenced areas in select cities. The focus will be on improving FSD reliability and gaining regulatory approval for truly driverless operations. Significant revenue from Robotaxis will be minimal, perhaps in the low tens of millions, primarily from limited trials. Profitability will be negative due to high R&D and operational costs. Regulatory hurdles, especially regarding safety, will remain a major bottleneck. Elon Musk's ambitious target of millions of Robotaxis globally by late 2026 is highly unlikely to be met. Waymo/Cruise, continued expansion in existing cities, with gradual launches in new, carefully mapped geofenced areas. They will likely maintain their lead in fully driverless miles and operational scale. Revenue will remain in the low to mid-hundreds of millions for Waymo, still operating at a loss but with improving unit economics. Cruise will focus on rebuilding public and regulatory trust after recent issues. Uber/Lyft will continue to rely heavily on human drivers. Any autonomous integration will be highly localized, perhaps through pilot programs with Waymo or other partners in specific zones, generating negligible revenue. They will be closely watching the progress of dedicated robotaxi players. Years, mid-2027 Tesla, assuming regulatory approvals for driverless operations in a few key cities, Tesla could begin to scale up its owned robotaxi fleet. Revenue might start to hit the low hundreds of millions, still unprofitable but with margins improving as operational costs per mile decrease. Tesla might also begin to explore a host model, allowing FSD-equipped car owners to add their vehicles to a network, though this is far more complex. Waymo/Cruise, further expansion into more cities, increasing fleet sizes. They will likely be operating larger, more consistent services. Revenue could reach into the low billions, with a clearer path to profitability in core operational zones, but still overall unprofitable as they continue to invest heavily in expansion. Uber/Lyft could start to see limited but growing integration of autonomous vehicles on their platforms in high-demand, geofenced areas. This would be mostly through partnerships. The bulk of their revenue will still be driver-based, but AV integration becomes a more tangible strategic focus. Years, mid-2030 Tesla, if Tesla successfully navigates regulatory challenges and scales its FSD technology, Robotaxis could become a significant revenue stream. Estimates vary wildly, but ARK Invest, for example, projects that autonomous ride-hailing could make up a substantial portion of Tesla's enterprise value by 2029. We could see revenue in the tens of billions of dollars annually from Robotaxis, potentially reaching positive operating profitability in mature markets. The Cybercab purpose-built Robotaxi might start to see wider deployment. Uber/Lyft could start to see limited but growing integration of autonomous vehicles on their platforms in high-demand, geofenced areas. This would be mostly through partnerships. The bulk of their revenue will still be driver-based, but AV integration becomes a more tangible strategic focus. Years, mid-2030 Tesla, if Tesla successfully navigates regulatory challenges and scales its FSD technology, Robotaxis could become a significant revenue stream. Estimates vary wildly, but ARK Invest, for example, projects that autonomous ride-hailing could make up a substantial portion of Tesla's enterprise value by 2029. We could see revenue in the tens of billions of dollars annually from Robotaxis, potentially reaching positive operating profitability in mature markets. The Cybercab purpose-built Robotaxi might start to see wider deployment. Market snapshot: the autonomous vehicle market itself could be nearing $100 to $200 billion annually by this time, with Robotaxis forming a significant portion. Competition will be fierce, potentially leading to price wars, but also rapid innovation. Years, mid-2035 Tesla, this is where the long-term vision truly takes hold. If Tesla's Robotaxi network becomes pervasive, it could be a dominant force in urban mobility. Revenue from Robotaxis could easily exceed $100 billion annually, with very high profitability due to the elimination of driver costs. Tesla could be generating more revenue from ride-hailing than from car sales. Waymo/Cruise and others will likely be well established, potentially operating massive fleets and competing fiercely with Tesla. Consolidation in the market is probable. The global autonomous vehicle market could be well into the trillions of dollars by this point, with Robotaxis as a core component. Uber/Lyft, their survival and growth will depend entirely on their ability to adapt and integrate autonomous fleets seamlessly. They may become primarily software and logistics platforms, leveraging autonomous vehicles from various providers. They might have significantly improved profitability due to reduced labor costs, but their market share could be challenged by direct-to-consumer robotaxi services. Overall impact: this is the scenario where personal car ownership in cities significantly declines. Robotaxis become a ubiquitous, affordable, and efficient mode of transport, transforming urban planning, infrastructure, and even real estate. Regulatory frameworks would be mature, and public acceptance would be widespread, assuming a strong safety record. Profitability projections, general principles. The core principle for robotaxi profitability is the elimination of the driver, which is the largest operational cost in traditional ride-hailing. Tesla projects operating costs as low as 25 cents to 40 cents per mile, significantly lower than Uber's typical $2 per mile. This massive cost advantage, coupled with higher utilization rates, vehicles operating 24/7, could lead to exceptionally high gross margins in the 50 to 80% range once scaled. However, the initial years will see heavy investment in R&D, infrastructure, and regulatory compliance, keeping profitability negative. Now, for the question every Tesla investor wants answered, what is the quantum the robotaxi business can bring to Tesla stock price? This is where things get speculative, but the potential is enormous. Many analysts, including Cathie Wood's ARK Invest, believe Robotaxis are the primary driver of Tesla's future valuation, far outweighing its traditional automotive business. Current valuation: Tesla is currently valued primarily as an automotive company, albeit one with significant tech and growth premiums. Its Q2 2025 deliveries might have been lower, but the stock still jumped on Robotaxi news, signaling investor belief in this future. The paradigm shift: if Tesla successfully transitions from a car company to a transportation-as-a-service (TaaS) provider, its valuation model fundamentally changes. Instead of selling a car once, they would generate recurring, high-margin revenue from every mile driven by their Robotaxis. This shifts the focus from unit sales to fleet utilization and per-mile revenue. Analyst projections: ARK Invest has a bull case of Tesla reaching $3,100 per share by 2029, with nearly 90% of that enterprise value attributed to the robotaxi business. They project hundreds of billions in autonomous ride-hail revenue. Their model assumes a high take rate for Tesla, similar to what Uber takes from drivers, but for autonomous miles. Wedbush, Dan Ives also incredibly bullish, seeing 90% of Tesla's future valuation tied to autonomy and robotics. He's called the robotaxi launch a game-changer and believes Tesla could reach a $2 trillion market cap by late 2026 if Robotaxis scales successfully. William Blair estimated Tesla's robotaxi business alone could be worth $299 a share, nearly 10 times the value of its legacy auto unit. The logic: cost advantage: if Tesla can operate Robotaxis at 25 to 40 cents per mile, they can undercut traditional ride-hailing significantly, capturing massive market share. Scalability: with millions of FSD-equipped vehicles already on the road, a simple software update could theoretically unlock a vast fleet, assuming regulatory hurdles are cleared. This is Tesla's unique advantage over competitors who need to build out entirely new fleets. Recurring revenue: the shift from one-time car sales to a continuous revenue stream from every mile is a game-changer for valuation multiples. Companies with recurring revenue streams typically command much higher multiples. Caveats: these are projections. The actual impact hinges on several critical factors. Regulatory approvals: this is perhaps the biggest unknown. Governments and the public need to be convinced of the safety. Technological perfection: FSD still needs to achieve true level 4 and 5 autonomy in diverse environments, reliably and safely. Edge cases are incredibly complex. Competition: Waymo and Cruise are already operational, and traditional automakers are heavily investing. The market will be competitive. Public acceptance: incidents, even minor ones, can severely erode public trust and slow adoption. Elon Musk's execution: historically, Musk's timelines have been ambitious, and robotaxi deployment has seen delays. If Tesla does achieve a significant portion of its robotaxi vision, it's not a stretch to imagine hundreds of billions, or even trillions, added to its market cap, potentially making it one of the most valuable companies in the world. The shift from a hardware-centric valuation to a software/service-centric valuation would be profound. It's crucial to acknowledge the immense challenges and risks that could derail even the most optimistic projections. Technological perfection and edge cases: while FSD is impressive, it's not perfect. Real-world driving presents an infinite number of edge cases, unusual, unpredictable scenarios that are incredibly difficult for AI to handle. From unexpected road debris to complex human interactions, achieving truly superhuman reliability is a monumental task. Tesla's camera-only approach, while cost-effective, is viewed by some as riskier than systems incorporating LiDAR. Technological perfection and edge cases. While FSD is impressive, it's not perfect. Real-world driving presents an infinite number of edge cases, unusual, unpredictable scenarios that are incredibly difficult for AI to handle. From unexpected road debris to complex human interactions, achieving truly superhuman reliability is a monumental task. Tesla's camera-only approach, while cost-effective, is viewed by some as riskier than systems incorporating LiDAR. Public acceptance and trust. High-profile incidents, even those caused by human error while FSD is engaged, erode public trust. People need to feel overwhelmingly safe and comfortable in driverless vehicles. Building and maintaining this trust is critical for widespread adoption. Competition and pricing pressure. As more players enter the market, pricing per mile could be driven down, impacting profitability. The Uberization of Robotaxis means competitive pricing will be a key factor. Infrastructure and scaling. Deploying millions of Robotaxis requires robust charging infrastructure, maintenance hubs, and a sophisticated operational backbone to manage the fleet. This is a massive logistical undertaking. Insurance and liability. Who is liable in an accident involving a robotaxi? The manufacturer? The software provider? The fleet owner? These legal frameworks are still evolving and will have significant financial implications. Cybersecurity risks. A fleet of interconnected, autonomous vehicles presents a tempting target for cyber attacks, which could have catastrophic consequences. These aren't small obstacles. They represent monumental engineering, regulatory, and societal shifts that will take time and meticulous effort to overcome. Despite these challenges, Tesla possesses unique advantages that position it strongly in this race. Data moat. With millions of vehicles on the road collecting real-world driving data 24/7, Tesla has an unparalleled data advantage. This data is crucial for training and improving its AI. ARK Invest estimates Tesla accumulates data at 110x the rate of Waymo. Vertical integration. Tesla designs its own chips, Dojo, AI chips, develops its own software, and manufactures its own vehicles. This vertical integration allows for rapid iteration and optimization, something traditional automakers struggle with. Cost structure. The camera-only approach, if it proves as safe and effective as LiDAR-based systems, offers a significant cost advantage in hardware, leading to lower per-vehicle deployment costs. Brand and ecosystem. Tesla has a powerful brand and a loyal customer base. Its charging network, energy storage, and AI initiatives create a broader ecosystem that could support and accelerate robotaxi deployment. Elon Musk's vision and drive. While controversial, Musk's singular focus and ambitious targets often drive Tesla to achieve what others deem impossible. Ultimately, Tesla's bet is on its software and AI being so superior that it can overcome the sensor disparity and achieve full autonomy at an unprecedented scale and cost. If they succeed, the impact would be truly transformative. The robotaxi future isn't a distant dream, it's already beginning to unfold. Tesla's entry, with its bold vision and unique approach, promises to be one of the most disruptive forces in the automotive and transportation sectors. While the road ahead is fraught with regulatory hurdles, technological challenges, and intense competition, the potential rewards, both for Tesla as a company and for the future of mobility, are staggering. The next few years will be critical in determining whether Tesla truly unlocks the trillion-dollar robotaxi market and cements its place as a leader in autonomous mobility. What do you think? Will Tesla's Robotaxis revolutionize transportation, or are the challenges too great? Let us know in the comments below. Don't forget to like this video, subscribe to Inside X for more deep dives into Elon Musk's world, and hit that notification bell so you don't miss our next video.